I've made hundreds of thousands of dollars trading this strategy. It's one of the simplest strategies in trading, in my opinion. It works very well in specific conditions and it works terribly in other conditions. We're going to talk about breakout trading. I'm going to talk about all the variances of a breakout. We're going to go through the basics, how to enter, what will be your triggers, what are some specifics in different environments, what are the best places to trade breakouts. And basically, we're going to cover absolutely everything that you need to know in order to have conviction in such a setup whenever you see it. But first of all, what exactly is a breakout? So usually, price action moves up and down or sideways. There are only three ways for price to move. But at some point, you could see that price is starting to respect a specific level. So in this case, let's say this area right here. So this is a key resistance that the participants on the market are showing you is of importance, which makes for a very interesting level to trade around. And as you can see, even though it's a drawing, we're going to look at specific charts and example, but just, for the theory, you could see that once we have a few reactions, this is already a very cleanly established level respected by all participants. So once price starts squeezing into this area, there's a potential for a breakout to occur, which pretty much means that you have a level and then at some point price breaks through it with more volume and with more participants than usual. You could see here, I'm going to show you an example, but usually for a breakout to work well, it means that everybody needs to be looking at this area, and we will have a combination of people that are trying to short that were successful maybe here, and here, but then they will fail at their shorts. So this area right here will break out, which means they're going to be trapped and they will have to buy in order to cover their short. And then you have breakout traders like us that are piling up to take advantage of this aggressive move, which means to more buying and price going higher. And obviously even at this level you want to see even more buying because people are starting to FOMO in, because this has been a very important level and you see more and more longs piling in. Ideally, in the ideal case of a breakout, you see multiple touches, which means that the level that we're looking at is getting weaker and weaker with every touch. And also, the longer this consolidation below resistance continues, the higher the probability that the breakout is going to work, and it's going to work well. So imagine this is a weekly chart. This could take months sometimes to play out, even years for a breakout, depending on the asset that you're trading. And if this is the hourly chart, maybe the signal for a breakout will not be that strong. So in theory, these are pretty much the key things that you need to know about the breakout. And also one very important thing is that you need to have a clearly established trend, or at least the sentiment on the market to start turn, in this case, bullish. Breakouts also work as breakdowns on the other side. So for example, if price starts breaking down of this level, but from my experience and just going through the years of crypto trading, usually the best way to trade breakouts is during strong bull markets and to trade them on the upside. On the downside, it's not the best of the best of setups, in my opinion. That's why I'm saying it's very specific when you trade it and when you can trade it, but also gives you very clean way to go around the chart and find levels and define everything that you need to know in order to have a well-planned trade. And let's look at a specific example so we know what we exactly are talking about. This is Bitcoin way back. This is 2019, but it's pretty much the cleanest of breakouts that you could have. So first of all, we obviously had the breakdown here, a capitulation, and then price started doing one big nothing. Well, almost nothing, because as you can see, there was a consolidation around these levels here, so between 3 and 4K, but most importantly, price was squeezing at this level. So this is not the best line here. Maybe a little bit later it developed like this, but it was squeezing and there were quite a few touches on the way before it started to break down. And as I said, more touches means this level weakens more and more. If you got just one touch, the probability of rejection is much higher than if you have 5, 10, whatever touches, depending on the time frame. And also take a look at this. This took around 130 days to develop, so quite a long period of consolidation. And then once the move started here, and we can zoom in a little bit more, you see that right away we didn't just break out and fly. This is the ideal scenario. We had a few candles here around this area, and then we had the massive spike in volume, and you can see this here on the chart. We had a couple of days of very high volume that kind of signifies this breakout and the potential for it to stick, because the other option is you don't have much volume and then suddenly price does something like this. So it goes to the level, breaks above it, and then just pukes back below it. So this is also quite often when the market is not just yet ready to have a breakout. So again, when you want to enter such a thing, and let's talk about some entry triggers here. First of all, you want to have clearly defined level, in this case around 4K, very nice level. Sometimes, it's not a specific level. It's not like $4,000, 113. It's more like an area between 4K and 420, something like this. So usually these breakouts are not picture perfect, especially on the higher time frame like this one. And usually they are around areas. It's not a specific price that just perfectly interacts and that's it. So just keep this in mind. And then what you want to see is ideally, again, it's very important to mention this because we're going to look at a lot of examples that it's not ideally how this happens. But when you start seeing the volume, so somewhere around here on this candle, and if we go down to the hourly, you'll be able to see the push through the volume. Somewhere between these 2 days, when you start seeing this, you could start piling in your entries. And now the way you set this up is that if the structure of the chart changes, this means that the breakout is failing. And you could do this. So for example, in my opinion, this is the prior low here that is of interest. You could see by the wick, it interacted here also with the previous level around 3.8. And then this is where the last move started, the last move that caused the breakout. So for me, this is a significant level here that I'm willing to base my risk off. And it's around 7 or 8% from where potentially I will be entering if I believe this breakout is happening right now. And then obviously the target you can set later depending on where we are at price discovery and so on. But the more important thing here is the risk and how you set your risk, because there are quite often breakouts that we're going to look at where they just blast off. There hasn't been that much price action squeezing into this ascending triangle that will help you determine the risk so low, because here 7% for Bitcoin at that time, it's nothing. It's a good risk to reward, and obviously you can manage this with size. We're going to discuss a lot of things like this. So if you're interested, stick around. I'm planning to pretty much dump all the knowledge I have and have it in video format, so people can learn from these videos. But yeah, this is the ideal scenario, and this is where you enter. So somewhere around here, you will see a spike on the 1 hour chart. You will be able technically to see that we're closing on the 1 hour chart, and we have more volume coming in here on the lower time frames. And then you take the position, and obviously beforehand you need to define where your risk is, because maybe this breakout happens later and you see it somewhere around here, and you need to be ready for this. And you'll be like, okay, does this 10% risk is okay for me based on my sizing, based on how far we are now? And you need to make decisions on the go, because not always you'll be on the computer to pull the trigger when these breakouts happen. So yeah, these are the basics of entering this trade. And also I want to list few pros and cons for the breakouts. So first of all, it's very simple to trade breakouts. And let me just look into another example. Let's see arrow. So you have this price. Let's go to the 4-hour chart here and we'll see it a little bit better. This is a token I was looking into, so it's quite a interesting chart that we had. So ideally, you have very clean structure on the chart and very clean level. So here the lows on arrow, and here right away I could see where the most of the reactions happened. So in this area right here, and you can fine tune it. This was at the time lower cap token, and that's also very typical to see those wicks here, as you can see even here, 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 you know, here even before the breakout. So it's a messy chart, and that's okay because it's normal, you know, depending on the asset that you'll be trading, it's not always going to be perfect. But it's a very clean example of, you could just with a quick snapshot define the areas of interest and where potentially a breakout could happen. So this is a very good pro for the breakout traders. And then another one is that if the breakout works, you're instantly in profit. You know, I cannot tell you the number of times where you get into a position and it starts trading against you before potentially hitting your stop loss, or, you know, going up in the direction you want. But generally speaking, being at a loss at any given moment, it's not a great feeling. You know, it's just not. And yes, as traders, we need to know how to deal with this, and you know, it's just part of trading. But you know, we always want to feel like we're winning, and breakouts are pretty much guaranteed, if it's a good breakout, to have you instantly in profit. And sometimes price never even looks back. So this is very good. And in bull market conditions, most breakouts work out. That's also something very important, because you want a reliable setup that will provide reliable returns, or at least statistics, you know, for your trade journaling, that you could manage easy, define easy, and you could also see repetitive. So every time you do it, you could see similar outcome, and this, you know, makes you a better trader when you can take a trade and back test it and test it live on many charts in a short period of time, let's say 6 months, 1 year. Then you'll be able to learn more. And whatever we discuss here, it's just the theory, guys. And in practice, you see that every chart is a little bit different, and I cannot teach you experience. You need to go down in the trenches and wait for the perfect conditions, because if you start trading in a bear market and you're taking only breakouts, you will not have a lot of fun, trust me. Even you could see it on this chart. Imagine this was a big spike in volume at that time. It looked like it's breaking out, and then it just pump faked. So if you're on the wrong side of this breakout, you wouldn't feel great. And this is very typical, and that's one of the cons of this setup, that it works like 90% of the time. It works during a bull market, and it doesn't work in most other situations. And as I mentioned, I'm not a huge fan of the breakdown setup, because it also doesn't work, especially on more mature markets, especially when you have algos and a lot of big participants that could manipulate the market, and they could take obvious places where stop loss placement happens, especially for retail traders. Whenever, you know, you see these kind of wicks, you know that, you know, they're here to hunt some stops and then move in the direction that the market wants to move. So it's very, very tricky if you don't know what you're doing, and if you're not in the right environment and in the right type of market. And this is actually another con, you know, that you could see a lot of stop loss runs like this, and you could also see the exact opposite. So with Bitcoin, if you go back to another potential breakout, it doesn't mean that you will not have situations like this. So let me just see this. So this is one of the examples. We had a breakout area here for Bitcoin. It chopped, it broke out, although this wasn't that long of an accumulation before it broke out, but it kind of hits all the spots for a breakout, even if we just take this part of the chart. So if you just look at this chart, it's a very nice breakout, volumes here and everything, but then it just fakes out, runs a lot of people out of the room. You can see by this wick, and then it actually starts trading in the direction that we really want it. Okay, then it chops back again, but you see pretty much very clean here the price action. So this could happen. It could happen very quickly. So you need to have clean risk management, because sometimes if you get a 4-hour close below this area that was resistance and price failed to make into support, I would prefer to just get out of the market, because technically on this trade, if you were on it, you probably entered somewhere around here on a breakout trade, and technically the first low is way down here. This is 6%, so it's not that much if you just look at it as a percentage, but you could see the number of green candles before that. It's quite a significant number. So technically speaking, maybe if you go down to the 1 hour chart, you'll be able to see a little bit more price action. Maybe you place your stop here, but it doesn't necessarily mean that you always have to keep a breakout if you see it failing until it hits your stop loss. Yes, sometimes it will just come take a dive a little bit, but keep this low. But it's if you see it with violence just losing a level, then I would say it's better to get out here and then look for a re-entry, because again, you could see here there was an area where again price chopped around, came back through, liquidated a bunch of people here, and then consolidated again, and then gave us another breakout at the same exact area. So this could happen, and this is true for pretty much every setup in trading. But if you want to be successful, you need to be nimble, and you need to be able to adjust the plans on the go and not be afraid to lose a little bit more here, then take a stop at the same setup with a little bit different risk management here, obviously, because you have a little bit more information. So be prepared for all kinds of situations like this. And there's the other option, where we could, let me just find this on the chart. Oh, where is it? Yeah, you could see this option as well. So here you got another breakout on Bitcoin, very significant level. You were looking at the 10K area, and then it broke out, it fizzled out. This is a weekly chart, so keep in mind this took a while to develop around here, and then we had a violent retest, but we never came down below this level here around 9K. So let's say you took the breakout here and put your stop loss somewhere around here. It's 14%, not too bad. And then when you get the retest here, this could be another opportunity to enter, which is a totally different setup that we're going to discuss a little bit later. But also, you could see that we didn't even close on the weekly. We didn't have a close here below this level, and it also took some time. So this is the so-called rounded retest. But if you see a pump and then a puke in just a few days, then that's a totally different thing, because the key feature of the breakout is that you want to see strength right away. You don't want us to be maybe it will break up, maybe you don't want to see any kind of wondering in this situation. You just want it to chop and go, and nothing else. Never look back. So something like what happened here on the secondary breakout. Just delete this. Here on the secondary breakout. So this is what you want to see. Just price trending with power in the direction of interest. And there's several different types of breakouts that we can discuss here. So the first one that I think is also one of the simplest to kind of see and trade around is the accumulation breakout. So we're going to use several charts here just to see what exactly I mean. Let's use arrow here again, but this pretty much is an accumulation breakout. So you got a few days of red once this token launched and it just sold off, but then it found a base and it started consolidating around this area. And then once price started breaking out of here, the price started really trending in this direction. but very nice and easy. Not a lot of volatility on this chart. You could frame it. It takes a few weeks at least for this type of price action to develop. And of course, it's a little bit difficult and a little bit arbitrary to define like what is exactly the accumulation range, because you might argue like this is just chop here. These are just a few candles. Maybe this. Why is this not the accumulation? It's very difficult to find those areas and say, okay, this is a clean setup with clean accumulation and so on and so on. But it takes time. Let me show you a more recent example of Giro, which I believe is still in accumulation, by the way, but it looks very, very different. So you could see here that this is the entire chart history. So it's about 1 year of price history. And I would argue that this right here, like this entire area, is an accumulation range for Giro. And potentially we still haven't really gone above it. It's still accumulating. So potentially there's a breakout setup somewhere in the future that will occur, and might be here, on the all-time high. But still, I believe, Giro could have this moment of a massive accumulation breakout because, it's been accumulating for so long. And this actually is perfect example for the next type of breakout that you could see, and that is a mid-range breakout. So if we zoom in a bit on the chart, you see that this area here, so this is from July to November, so quite a few months here. You could argue that this here is an accumulation range. So if we just delete this. So now, currently we're seeing Giro accelerating in under the right conditions on the market. You could see the spike here on the volume, and now it has broken out, retested, and held this breakout level. So you could see this very clean, and you could say that this is a breakout, and it is technically a breakout. However, if we zoom out, you see that it's within a much larger area, and it's a mid-range because there's a lot of key levels that price is starting to respect above it. And you could see the first trouble area here around 330. Right away price got rejected, and potentially it's consolidating higher. Maybe then we'll have another mid-range breakout somewhere around here, and then potentially we'll get the full accumulation breakout here at the highs. We'll see how this will develop, but you pretty much see live how the chart is being read and how you could decide if you're doing business at a significant area or no. Because sometimes you might look at an area and say, wow, this is a great breakout area, I'm going to trade it, and yet the market just doesn't react to it, or at least not with the violence that you would expect on a good breakout. So it will take time and practice, and a lot of staring at charts and marking areas and mistakes that you're going to make to define which are the key areas for a breakout. And one of the most important thing is to look for confluences. So for example, on the breakout that I just showed you here on Bitcoin, this one, first of all, it took quite a while, but it was watched by a lot of people, and it was a very key area. So it was at 10K. So this is an emotional level. It's halfway from the all-time high breakout, which was back then somewhere around here. And we're going to discuss all-time high breakout areas as well. And you could see here that there's a little bit more confluencing factors and not just a random area that you think. And these usually are good for specifically for assets like Bitcoin and other major assets that people have a lot of eyes on. And if you're trading smaller coins like Giro, for example, it will be a little bit more difficult for accumulation specifically and for mid-ranges to decide, where's the area that I want to be doing business. And another caveat on accumulations and mid-ranges, let me show you just by here. So this token, it had a pump, so not a dump right from launch, but it had a pump, and then it just trended down. And I would say, just on a first look, I'll just give you a second before I mark it out, but I would say that this area around here started looking like an accumulation. And right now we're seeing Pyth breaking out of it, but yet it's not showing the strength that we want to see on such kind of a breakout here. And one of the reasons for this is because it's also, yes, it's accumulating, but it's also kind of a mid-range, so there's a lot of price action history here. And you could see, this level, you might argue that this area around here in the future will also be key, but you don't see the viciousness of some other charts that you'll see. And you obviously don't know which one is gonna start trading right away, trending right away, and which one is not going to. But you need to be careful with this mid-range because it gives you a little bit better entry, but it also has the risk of failing, I think, much higher percentage of the time compared to, let's say, clean accumulation all-time high breakout. And all-time high breakout is exactly what it sounds like. And in specific case, let's take the most recent case for Bitcoin. So we had a first test here, first new all-time high for the year, and you can see around this year, around 70K, we had several touches, but then we started grinding down lower and lower, lower and lower. Then obviously we had catalysts. In this case, it was Trump getting elected, but we had one first push to retest again the all-time high area. You had a retrace here into this 67K area, and actually this was a very nice and clean all-time high breakout. Let's say you take this and you put your stop loss here around 10%. Very, very clean chart here on Bitcoin on the all-time high breakout. And you could obviously target here, in this case, around, let's say, 100K as a round number. And, if we line up some pips, some fips, they will line up probably also in this area. But you could see what a breakout of all-time high looks like. In this case, there are a lot of things that lined up. So there was a narrative. We were in a bull market. We started shifting structure much early here, of Bitcoin. So there are a lot of things that compiled and kind of gave us confluence for this breakout to happen and to be a good one. Obviously, the risk here in general is higher because we have already kind of faked out here because people thought we were gonna, go higher, but you could see that we did go higher and then we just puked and so on and so on. But this situation was a little bit different because of all the catalysts in place. And the good thing about all-time high breakouts, whenever they happen, is that usually above it, it means everybody's in profit. There are no people that are not in profit on Bitcoin, or very, very small percentage right now on this chart. And this means, that it's kind of like a self-fulfilling prophecy. People will start piling in and they will want to buy more and they will FOMO in, and this will lead to more price action upwards, and then more people will FOMO in, and so on, so on, so on. So this is how it works. And ideally you get, some kind of like first or second test of the breakout, at least on all-time highs, and then the sky is clear. Same thing happened to Arrow, so this one, before it actually took off, was pretty much, this case, this was the all-time high breakout if we take. But usually when a new token is listed, I kind of disregard the first few candles for different reasons. But for me, kind of an all-time high accumulation breakout was this one. And then you could argue, like with this touch here, we had another one. But you could see what I mean. Let's see if Bean was such an example as well. Yeah, so pretty much picture perfect breakout here on the all-time high. So this chart is very interesting because it got all kinds of breakouts. And let me show you. So first we got the accumulation here, which was kind of messy, but this was a very small token. Then we got an all-time high breakout here. Again, very clean structure, ascending triangle, broke out with violence, and then it started trading right away. Then we had another one, but this was really, really tricky because there hasn't been that much price action. And in this case, look how many green days in a row you had. So this is difficult to place, stop loss in such situations. And I will show you in a bit how to trade those kind of scenarios. And then on the other side of the chart, after it broke down, now we're currently seeing another reaccumulation breakout here, which is kind of mid-range, but you could see again a very clean pattern of a breakout here happening. I wanted to talk about also the types of secondary breakouts that we see, and there are a couple of examples I want to show you, and that's why I said Bean is great, because you could see here same thing. So one of the ways to trade this here, so let's say you have a key area. Let me just mark it again. So we got this key area right here. However, this here before the breakout is 1, 2, 3, 4, 5 days of green straight up from the bottom of this price area right here. And it's very difficult to trade into such kind of strength. In a way, you want to see this kind of strength, but also on the other side, you're like, where do I put my stop loss? It's very difficult. And there are 3 ways pretty much to trade this. I'm going to show you all of them. But first one is that at some point, price will have a retrace. Yes, it might be much higher, might not even happen, like even in the case of Beam. Like here, there was no retrace. Not whatsoever. Maybe on the 1 hour you could find some here, but it just doesn't happen. In this case, you just don't trade it. If you missed it, there are a shit ton of charts out there that you could just pick and look for this pattern. But the other way that this happens and plays out is that you usually got some kind of a retrace. And this is the theory of the first test, best test. So first time this tests as support, in this case, flipped resistance into support, this is the highest probability of this to hold. And as you can see, for now, Beam has been holding. So you could either enter here on the retrace, or if you just want a breakout trade, you could now look for the secondary breakout. And this is a great way to also set your risk, because now you don't need to, so let's do this. You don't need to take the trade here and set your stop loss here at 30%. Maybe that's too much for you. But you could do wait for the secondary breakout and then have a much more manageable 17-18% risk here on this specific trade. So as you can see, if you're a bit more patient, you could see this playing out. And you could see it in many charts pretty much. Let me just show you another recent one. Arkham is another one, and you could see this as kind of a level of interest here, and it started breaking out. Shifts of the trend you could be seeing here. We had a retest of this level, retrace, and maybe you missed this one. Or maybe, when you see it fizzling out, you closed it. And this is actually very similar to the example of Bitcoin that we discussed a little bit earlier. But here now you have a secondary chance for entry on a secondary breakout, and then you set the risk below this new pivot low here, and then obviously you target highs. And even if you don't like the risk to reward here, if this is a properly trending market, maybe you take it from here, maybe you take it from here. So next breakout level. And you could do this all day long pretty much. If you have a good trending market and it just doesn't go parabolic, you could do this and enter on several occasions. Obviously, if you do this and there's price history, you also need to zoom out and look at key levels above. So if you want to be taking this, let's say, as a breakout, then again, this is probably a first trouble area, and you got to see where the risk to reward lines up on this one. So this is another type of entry that you could have if you missed the breakout. Another one is, I want to show you on EOS here. This is a trade I took recently, and it was like this. So first of all, we have an area where I marked out. It's a bit messy, but I was like, okay, this area around 55 cents. For me, it's important enough to keep an eye on. I didn't have an entry here at the bottom. So, okay, what do? I look for the next best way to enter. And what we saw here was that we started seeing a lot of touches here on this area, and price was squeezing into here. And at this moment in time, so this was right around the elections, I was like, okay, the crypto market is heating up. I was building up a thesis. This is an AI related token. It's listed on Coinbase, so the retail will have access to it. And I was like, it makes sense for this to rip higher. And also, it will make sense for me to maybe miss this trade because I'm not that active. I cannot sit on the computer all day. And I just want to have an entry for this one, although it's still technically under resistance. And I am not buying a breakout here, but I'm buying resistance pretty much. And if you go down to the 4-hour chart, you'll be able to see this clearly. But as price was consolidating here, I was like, okay, this to me looks strong. Like higher highs, higher lows on the lower time frame. It's keeping a level, squeezing into resistance. And I want to have an entry just because I know that if this flies, it will be hard for me to get an entry. And this is exactly what happened. So in this case, you could see also the volume spikes here as it was breaking out. But I built up a position here that I finally added a bit more here on the breakout. And it worked. In not many cases will happen, not all cases. But in this case, I was like, okay, if this area fails to hold, this was where my risk was. And this is where it's important to know, the plan in advance, to have execution, to know the monetary amount of money you're risking on this trade, all these little things that you have. So this is another way to kind of enter those breakout trades that potentially will happen, because as I said, not always you'll be here on the computer, and not always you'll be able to execute properly. Maybe you missed the entry, maybe you have to buy much higher. So in this case, this is another way to enter, because this also didn't really give a pullback until right here. And now I've marked out this area and we could potentially see another breakout. So again, this will be another entry. And yeah, that's most of the examples I wanted to show you on good ways to trade this. And I also want to show you quite a few bad examples. And when the environment and the narrative is not the best, what you should do and what a failed breakout looks like. And one of the examples I want to show you is GMX. So in the case of GMX, I was adding through here, but more specifically, I want to see the all-time high breakout. At this stage, crypto was still technically in a bear market. And GMX was a project, still is, that it's a perpetual DEX. It looked very sound fundamentally. And I was like kind of having big bias on it. And even before this, let's just hide it. You'll see that technically this was a very nice breakout, all-time high pattern. And it played out almost perfectly. Several touches, area of interest, volume here on the breakout. However, price didn't start running very quickly as good breakouts do. And then it started failing. And then this is obviously several ways to close this position, which I didn't on time. But you see that we had a big, massive engulfing candle, pretty much erased all the sentiment before that and all the price action in just one swift move. So this was a moment to close the trade. This was my first way to escape it, which I didn't. And if we go to the lower time frames, you see that price gave me another opportunity here on this retest, saying, okay, this is clearly a rejection and now it's clearly turning into resistance. I didn't exit here. And also, if you take the pivot low as an area of interest that you want to close your trade, again, I also didn't close here, although it was a very clean exit. Why was that? And this is something that you gotta fight with when it comes to breakout trading. If you have been trading breakouts for an entire bull market and they all worked, and at some point you get sloppy with it and you're like, this will come back, maybe okay, it retested, but maybe it will do something like this and then it will break out again. We saw examples like this already, but you'll see that sometimes if you fall victim into these and get sloppy, you will be burnt and you'll be a back holder, or you'll lose a lot more money than you wanted to on a given trade. So it's very important to be disciplined on every trade, pretty much, not only breakouts. But in this case, it can get ugly very fast, especially if you didn't read the market conditions right, and if it's not the right environment for breakouts. Because technically breakouts, one of the minuses they also have is that you're not very close to invalidation. You're looking at a pivot low, or come back here below a level and retest it. These are things that are not very close to your invalidation. If you're buying a washout, or if you're buying support, in this case, just an example, not the greatest example here, but if you're buying in this area, and then asking for a push higher, then you're very close to your invalidation right here. You got the history, you got the price action of this few candles. We're going to discuss this in another video. But in the case of breakouts, you don't have this luxury. You're not that close to invalidation. So you got to be very strict with your risk management. And something similar also with Arbitrum. And this is another lesson here that I want to show you of why you got to be careful with breakouts. Is that, okay, maybe you took this breakout on ARB and maybe it worked. Again, very good breakout, ascending triangle, all the goodies that we talk. Retested here, kept the level, and then ran off. However, if you're not scaling out, or if you don't have plan for taking profits, you might turn out to be back holding this even if it starts breaking down here. And you can see this was clean breakdown and few retests. And if you're not in the right mindset and you're hoping for a 10x, because this was what was happening in the bull market with breakouts, and you nailed the breakout technically, you need to readjust your thinking. This is very, very, very important. I cannot stress it enough that breakouts work in bull markets mostly. And even if they do work in other conditions, which was the case with Arbitrum in this case, you need to be strict with your strategy and with your profit taking and not get moon boyish. And it's also the narrative, because at this time I was at the stage where, okay, L2s and Ethereum will be a great narrative. I want to have Arbitrum. It's a great token. They have pretty much zero value for the token. It's just a governance token, but they have the biggest network of L2s. They have the most users. I built this strategy and this thesis in my mind. However, I disregard the fact that L2s may not be the thing. Maybe it's Solana, maybe it's something else. And this comes, it's subjective, but you need to know how to evaluate, the narratives you're trading. And in this case, obviously, it just puked, and you could see what exactly happened after that. And it's also one more thing about that we're going to conclude with about breakouts is that they usually work best not only in trending conditions and bull markets, but also on newer markets. And let me tell you some examples. So silver recently had a breakout and a fake out. So this thing started trending, but then the market sentiment and everything shifted and it broke down, and now you could see that this is a failed breakout. And that's okay, these will happen. It doesn't mean that every breakout you take will happen. But around this level, there was a lot of fuckery that you could see. This is a huge market, obviously, and it's, compared to with gold, it's not that huge, but it's a legacy market. There are a lot of algos trading it, and you could see here very cleanly, there are quite a few runs on price, and I could hear the screams on people participating and getting stopped out here on this potential breakout, because again, it looked picture perfect until it didn't. And then people got squeezed here, and then obviously price started then running in the direction. However, when it comes to smaller markets like altcoins, crypto, even like runes and little shitcoins, I think this is probably the place where breakouts work the best, because there's a lot of mental game playing into breakouts, and you can see it in the chart. If you don't have professional participants and not many experienced people, this is where breakouts work even better, because people get run over by their emotions and they're buying the FOMO, and all those things that make a good breakout. And you could see this Let me show you a few examples here. So this is a really tiny, this is currently at 6 million market cap, but back here it was even less, a tiny AI token. It's trading only on DEXs currently. And you could see very nice accumulation breakout pattern here. And it started trading right away. And then on the secondary breakout, it got a narrative, it is an AI token, and then it started really pumping. You know, it ran quite a bit before it started, you know, fizzling out. But this is already, you should have taken profit by now. But this is how you see how well breakouts work. Same currently is happening also with runes, and this specific one is the latest one that I'm looking at. It's a $1 billion CAD breakout of pretty much, this is an all-time high breakout and accumulation, because you could see this, it took a while, so a couple of months to develop, but you could see this area right here again. And I can bet here that this will be a very clean breakout, unless there's a different, you know, thing that could lead to a failed breakout. Maybe the environment changes or Bitcoin dumps, you know, there are all kinds of reasons. But if the conditions are stable, I can guarantee you that this will be a very nice and clean breakout. And you could see this across many patterns. It doesn't matter if it's a NFT collection, if it's obviously runes or some other small tokens. Whenever you have participants without a lot of experience, you could see these patterns work very well. And I can show you also another one here on Psycho, if I remember correctly. Here we go. So had a pump, it dumped, started accumulating, broke down, but then once it started going, so once this level was reached, and you could see that it just went to the stratosphere. And obviously this is a really low cap token with very little liquidity, so this actually also makes for good breakout trading, because in this case there are not that many listings to go around, and you could very quickly go from, with just several buys, from 140 in this case sats to 200, and then people start piling in, and you know, one thing leads to another, and you're 10x on the token. So this happens very often in these small examples that I showed you. That's everything for breakouts. If you want to learn more strategies and other ways to stay profitable on the markets, stick around, and I'll see you in the next one.